Today on Mining Minutes, we're going to be looking at the upcoming fourth quarter results from mining companies. Talking to me about it is Brent Cook, founder of Exploration Insights. He's on with me now. Brent, thanks for joining me. Happy New Year.
Glad to be here. Thanks, Alex. Same to you.
So Brent, earnings season is upon us again. Mine plans and final year results are the big questions that people are looking for answers. What do you see coming out of these results in the upcoming weeks?
I expect we'll see a lot of them meet or beat expectations, which expectations were lowered quite a bit during the year. That was sort of their game plan. I suspect we'll see some loss in reserves, and reserves pushed out to resources. I see Goldcorp just released today, and they've cut their reserves at Kitco. I think the last 4 or 5 years of production has been cut off and put back into resources due to the current gold prices and costing, that sort of thing. So I think we're going to see a lot of that going on as well.
Now, Brent, in one of your notes on Exploration Insights, you mentioned that you're optimistic, have some optimism for 2014, which is a bit of a shocker. Now, you said it's more for, on an investment side, investors to start positioning themselves in 2014. Can you maybe elaborate on that a bit more?
I think so. I mean, start off, we've seen in the GDXJ, which is, the basic junior mining index that I kind of chart myself against, past 2 years, it's off around 70%. So a lot of things have come down in value, both the good and the bad. And I think what we're going to see going forward is, I don't expect this to be a great year for investing in the junior sector. As I said in the letter, I think it's going to be a great year to begin positioning oneself in the better deposits. And by better deposits, I mean ones that actually have a reasonable CAPEX and are low cost. There's not many of those out there. What I see going forward is the mining companies have, they're cutting exploration, they're cutting everywhere they can, which is going to make this year or the past year look a bit better. They can beat expectations, but 1 year out, 2 years out, they're sort of stuck with a lot of resources that are no longer economic and production declines. So it's a good year to position, I think. That's really what it comes down to. I don't think we'll be making much money, but this is when you position yourself to make money.
I'm glad you brought up exploration and development. There have been significant cuts from miners in 2013 across the board when it comes to exploration and development. Now, while it seems like patchwork for now, what does that do for the industry in 5 to 10 years? Does it create some kind of supply glut? I mean, are we going to be in trouble in the upcoming years?
It's going to be tight. It's going to be very tight. I mean, we've seen discoveries falling off over the past 5 to 10 years anyway, 5 years certainly. And that's just due to the inherent difficulty in finding a new deposit. I mean, we've searched the earth fairly thoroughly. So everything's either hidden, deeper, more complex metallurgy, that sort of thing. So your deposits, economic deposits, discoveries, are tougher and tougher to find, more expensive to find. They take more time to find. And then there are the permitting and environmental and social issues that also delay the exploration, timelines. So what we're going to see is a significant drop in exploration spending over the next few years, I think, and a significant decline, or the continued decline, in legitimate discoveries. And I want to emphasize legitimate discoveries because there's a lot of discoveries out there, but most of them don't really make or won't make much money. So we're going to see a real decline, and that's what I think is setting us up for 2015, 16 and onward, is that my job is just to identify the half dozen or so or dozen or so deposits that will actually make money sometime down the road and will be the acquisition targets of some of these major mining companies once their board recognizes they're running out of ore.
Sticking with new discoveries or lack of new discoveries, with exploration being cut the way it has been in 2013 and most likely moving forward, there's going to be less of a chance, obviously, of finding new discoveries, but what would constitute a good new discovery in this current mining price environment? What kind of metrics would you apply to have a successful deposit brought through now?
Yeah, well, it's always been the same. Basically, you need to find a deposit, define a deposit that makes money. I mean, that's bottom line what it comes down to. But just to find that, you've got, and this is what I do in my letter, it's at the earliest stages in any exploration program, when you're looking at results as a potential investor or speculator, you need to jump right to how big can this be? What's the grade likely to be? What's the metallurgy likely to be? What's the CAPEX likely to be? What's the social situation going to be? I mean, for when I go in the field and look at a property or rock, the first thing I think about is, all right, what's it going to cost to mine this? And how much money is it going to make? And how much is it going to cost to get to that stage? So, it's always been the same, what makes a good deposit, but even more so now, given the market is not going to be buying our mistakes, we've got to be extremely careful.
All right, Brent, let's wrap up with the often asked and still search for bottom to the mining industry. Have we seen it in 2013, or is 2014 still going to see some tough sledding ahead?
I think tough sledding ahead. I suspect, and I don't know, we're just making guesses here. I suspect what we'll see is a bottoming process where it'll be miserable, really. It's just going to be a long, drawn-out bottoming process. And the advantage to that is that we'll be able to, on bad days, bad weeks, bad months, pick away slowly at the few deposits or companies that we think will survive and flourish in 2 years out. I think what any investor needs to come into this thinking is, when you buy something, be prepared to have the opportunity to buy it again at 20 to 30% less, and look forward to that, because that's probably going to happen.
Excellent stuff, Brent. Thank you for joining me today.
Always a pleasure. Thanks, Alex.
And thank you for watching this edition of Mining Minutes. If you have any comments or questions, please don't hesitate to send them to newsfeedback@kitco.com, or you can find me on Twitter @Alex_Letourneau. Have a good one.